This is Alan Bush with the Daily Financial Forecast for Thursday, January 19th. Starting out with the stock index futures, I would have to say that the indices held up very well yesterday, even though Janet Yellen's comments were a bit on the hawkish side. Even today, we're seeing prices relatively stable. Also, we had most economic reports today coming in somewhat better than expected, including housing starts coming in with good gains. Also, we had the Philadelphia Fed index coming in much stronger than anticipated. So longer term, nothing has changed. We still believe that the main trend is higher for all of the stock index futures, and that we are looking for new historical highs across the board. Now, moving over to the dollar index. On Tuesday, we had a very severe downdraft. This after President-elect Trump indicating that in his opinion the dollar was too strong. However, over the last couple of days, we have seen some recovery, with today's gains linked to prospects of tighter credit from the Fed later this year. In fact, those probabilities increasing in the overnight session. Also, very little movement in the euro currency. This after the European Central Bank at their policy meeting today, keeping their interest rate policies unchanged, their quantitative easing program also as expected, so no major surprises there, and the euro currency performing in kind with just a limited movement. Longer term, we do feel that the dollar index will probably continue to advance, since the Fed is still the only major central bank that is likely to raise interest rates this year. And in the interest rate futures markets, pressure yesterday on Yellen's comments, follow-through weakness today, with most of today's economic reports coming in stronger, which is a bearish influence on the futures. Also, the probability of a rate increase at the May meeting, this in response to Yellen's comments yesterday, moving up to 41%. Yesterday it was at 37%. So we continue to believe that the long-term trend for the bonds is lower as inflation continues to ramp up. And in the gold and silver, good gains over the last month or so, with the gold market advancing about $95 from the December lows. However, Yellen's hawkish comments putting some pressure on the gold market yesterday and today, and I think this is a very good opportunity to take advantage of this dip to come in to buy both gold and silver. And if we're right about our inflation accelerating as far as our forecast is concerned, this is a very good time to come in to buy both the precious metals, gold and silver. And I think this is just the beginning stages of a long-term bull market for the precious metals. So, good trading, everyone. And once again, remember, these are my opinions alone, and are not the opinions of ADMIS or Archer Daniels Midland.